Okay, great teens. Let's take a look at adjustment number 2, which is accrued income receivable. What does this mean? This means it's income that is outstanding. It is income that is missing. It's almost like you're waiting for it to be paid. You can also refer to it as accumulated, like it's almost piling up as this person is falling behind on giving you the money. Why are we concerned with this in our adjustments? We are referring to the matching principle within GAAP, which says or states that when you're busy with a financial year and your financial year statements, you have to have everything represent the past 12 months. So you need to look at everything just within this window. And the reason for that is so that you can do comparisons. You can compare last year with this year or the year before. If you were to start your financial year, let's say in March, the 1st of March, let's go with 25, and you end it now on the 28th of February, which would be the day that you are busy with adjustments. You would have to look at, let's say, for example, rent income 12 months. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months worth of rent. If you jump to your pre-adjustment trial balance, now a pre-adjustment trial balance is basically the same as one that you were taught in grade 9. Nothing funny about it. But next to rent income, for example, on the credit side, you found 110,000 Rand. And then in the information, they mentioned that the rent is 10,000 Rand per month. Immediately, you can do the mental maths and you say 110 divided by 10,000. You come to the conclusion that you have only received 11 months worth of rent. So that means this last month of February is missing, and you need to now include it in your books. So let's see what the adjustment actually looks like. I'm going to look at 2 general ledger accounts. One is sitting in your balance sheet section, and then the other one is sitting in your nominal section. Rent income is the nominal account, which will go to your income statement. It's an income that increases on the right. Therefore, the total, which I've already mentioned, sits on the right, the 110. You need to make sure that you add month number 12, February, in there, so that you now can have the correct amount, which is 120,000. You now have 12 months in your book represented, so you can do your comparisons. Double entry would mean that 10,000 Rand will have to sit on the debit side, because over here it's on the credit side. But this account is now referred to as accrued income. Now, you can just look at the double entry to know where it goes, but let's try and understand why is it written on the debit side. We see it as an asset because somebody owes us, okay? So this is an asset in my balance sheet section, and in my balance sheet, somebody owes me money. If I had to look at the details, I would write in here rent income, and over here I would put accrued income. And there's your debit and your credit for this adjustment. Please take note that this entry, this adjustment, is only valid for about 24 hours. So you are going to tomorrow, on the 1st of March 2026, the new financial year, you will reverse this transaction. You will put 10,000 Rand on this side to cancel it and 10,000 Rand on that side. Look what happens. Basically, this accrued income then disappears and only reappears when you do adjustments again at the end of next year. But now your books are relevant to a new financial year. So you needed to put that money back where it was so that it went back to normal. If you don't understand this, it will be explained in a separate video called reversals of your adjustments.